We thought a lot of economists believed that it would bounce back much more sharply, as we've seen in a number of other countries, but it's not really been the case.
Is the world's second largest economy facing obstacles on its path to recovery? Let's explore the factors contributing to China's stalling economic growth. China's economic data in May was weak, with industrial production, fixed asset investment, retail sales, and trade all falling short of expectations, which has raised concerns about the health of the world's second largest economy and prompted calls for decisive policy intervention. Let's start by looking at some of the latest economic data from China. In May, the Chinese economy grew at its slowest pace in 2 years. GDP growth came at 6.2%, below expectations of 6.3%. Several factors contributed to the slowdown in economic growth in May. One factor was a decline in property investment. Property investment fell by 7.2% in the first 5 months of this year. Another factor that contributed to the slowdown was a decline in consumer spending. Retail sales growth slowed to 12.7% in May from 18.4% in April. The slowdown in economic growth has raised concerns about the future of the Chinese economy. There are several other factors, but one of the biggest is the trade war with the United States. The trade war has hurt Chinese exports, which has led to job losses and lower economic growth. In addition to the trade war, China faces other challenges such as a property slowdown and a debt crisis. Another main reason for the weak data is the housing market. The housing market has slapped for the past few years, weighing on investment and consumption. The government has taken steps to boost the housing market, but these measures have been unsuccessful. The housing market may be getting worse. The unemployment rate among young people is also a major concern. The unemployment rate among young people between 16 and 24 hit a record high of 20.8% in May, a serious problem, as young people are a key driver of consumption. The government has said it is considering several policy interventions to boost the economy. These interventions could include interest rate cuts, fiscal stimulus, and measures to support the housing market. Most economists believe that growth will continue to slow in 2023. The International Monetary Fund forecasts that China's economy will grow by just 3.7% in 2023. As you know, China's economy has been struggling in recent months. Growth has slowed, inflation has been low, and unemployment has risen. The PBOC has cut interest rates twice in the past week to boost the economy. The first cut was to the 7-day reverse repurchase rate, a short-term lending rate banks use to borrow money from the PBOC. The second cut was to the 1-year medium-term lending facility rate, a longer-term lending rate that banks use to borrow money from the PBOC. These interest rate cuts are a sign that the PBOC is concerned about the state of the Chinese economy and is willing to take action to stimulate growth. So what can the government do to boost the economy? They can do a few things. They can continue to cut interest rates, making it cheaper for businesses to borrow money, which will help boost investment. They can increase government spending, which will help to create jobs and boost demand. They can introduce more reforms to make the economy more efficient, which will help to attract foreign investment and create jobs. The Chinese government is considering several specific measures to boost the economy. These include a consumer voucher program. This would involve giving consumers vouchers they could use to spend at retailers. Increasing the fiscal deficit would involve the government spending more money on infrastructure projects and other programs. Lowering interest rates further would make it cheaper for businesses to borrow money and invest. Relaxing property market restrictions. This would make it easier for people to buy homes, which would boost investment and consumption. Another option is to increase fiscal spending. The Chinese government could fund infrastructure projects or provide tax breaks to businesses. In addition to monetary and fiscal policy, the Chinese government could make some structural reforms. For example, they could reduce the regulatory burden on businesses or improve the efficiency of the financial system. It is too early to say for sure if the government stimulus measures will be enough to prevent a recession. There are several things that China can do. First, China can continue to open up its economy to foreign investment, which would help to bring in new technologies and create jobs. Second, China can focus on developing its domestic consumer market, which would help to offset the decline in exports. Third, China can invest in education and training, which would help to address the country's demographic challenges and create a more skilled workforce. The next few months will be critical for China's economy. the economy could avoid a recession if the government's stimulus measures are successful. However, the economy could enter a recession if the measures are insufficient. These measures can potentially boost the Chinese economy, but they also have some risks. For example, interest rate cuts could lead to inflation, while fiscal stimulus could increase the government's debt burden. It's hard to say, but there are a few potential implications. First, if China's economy goes into recession, it could hurt global growth. China is a major trading partner for many countries, so a slowdown in its economy could lead to lower demand for goods and services from other countries. Second, the weak Chinese data could also lead to financial market volatility. Investors are already worried about the global economy, and the weak Chinese data could add to those concerns, leading to sell-offs in stock markets and other financial assets. There are a variety of views among economists about the Chinese economy. Some economists believe that the Chinese economy is headed for a recession. They point to the slowdown in economic growth, the decline in property investment, and the decline in consumer spending. Other economists believe that the slowdown is just a temporary blip and that the Chinese economy will continue to grow in the long term. They point out that China still has a large population and a growing middle class. It's too early to say what the future holds for the Chinese economy. However, the recent slowdown in economic growth is a cause for concern. It will be important to watch the Chinese economy closely in the coming months to see if the slowdown is a temporary blip or the beginning of a more serious problem. The Chinese government is aware of the slowdown in the economy and is taking steps to try to boost growth. They have cut interest rates and lowered reserve requirements for banks. They are also considering other measures, such as fiscal stimulus. It remains to be seen whether these measures will prevent a recession. However, the Chinese government is determined to avoid a recession and will likely take further action if needed. A recession in China would have a significant impact on the global economy. China is the world's second largest economy, and its slowdown would likely lead to slower growth in other countries. A recession in China would also harm global financial markets. China is a major investor in global markets, and its slowdown would likely lead to a decline in asset prices. So what does the future hold for the Chinese economy? It's difficult to say, but there are a few possible scenarios. One scenario is that the Chinese economy will continue to slow down, but it will avoid a recession. Another scenario is that the Chinese economy will experience a mild recession but recover relatively quickly. A third scenario is that the Chinese economy will experience a deeper recession, which could significantly impact the global economy. I think the future of the Chinese economy is uncertain. Several factors could affect the economy, including the property market, the trade war with the United States, and the global economy. However, I do think the Chinese government is committed to maintaining economic growth. I believe that the government will take steps to address the challenges that the economy faces, and I think the economy will eventually recover. Thank you for joining us on this insightful exploration of China's stalling economic recovery. If you found this video informative, don't forget to hit the like button and subscribe to our channel for more engaging content. We would love your thoughts and insights in the comments section below.